And in this presentation, I want to consider the risk and reward of investing in growth stocks. The risk and reward of investing in growth stocks. First of all, we want to consider number one, an introduction to growth stocks. Introduction to growth stocks. Growth stocks are companies expected to grow, at a faster rate than the market average, often leading to uh, a high potential for capital appreciation. They grow faster than the industry rates, and they are expected to accumulate, you know, capital appreciation along the way. They are typically found in emerging industries or sectors with high demands for innovative products or services, like in the technology sector, like in biotechnology. You find these stocks in those sectors. Number two is reward of investing in growth stocks. Reward of investing in growth stocks. You have high potential for capital appreciation. Growth stocks can experience significant price increase over time, especially in expanding markets or with successful products. If its products are successful and innovative enough, our consumers will patronize the product, and that will cause the company concerned to grow. There is compounding earnings. Compounding earnings. As these companies reinvest their earnings into further growth, investors can benefit from compounding returns. They don't pay out dividends. Generally, they reinvest their profits to further expand the company's growth. Industry leadership. There's an industry leadership. So growth stocks often dominate their respective industries, which can lead to sustained revenue and earning growth. They tend to dominate their industry. They are industry leaders. Another reward is market excitement. Market excitement. Growth stocks are often favored by investors looking for higher returns, and positive market sentiment can boost their stock prices further. Number three, risk of investing in growth stocks. We've just considered the reward. We want to look at the risk of investing in growth stocks. Number one is volatility. Growth stocks can be more volatile than other types of stocks. Their prices can fluctuate dramatically, especially during uncertain market conditions. They fluctuate a lot, and they do some wild price swings. So they succumb so much to volatility. There's the risk of overvaluation. Overvaluation. Growth stocks are often priced based on future growth expectations. And so if the company fails to meet these expectations, then you could guess what will happen. The stock price can drop significantly. Number three, there's lack of dividends. One of the risks inherent in growth stocks is lack of dividends. Many growth stocks reinvest profits into further growth rather than paying dividends, which means investors may have to rely solely on capital appreciation for returns in the absence of dividends. There is an unpredictable, growth. The growth is an unpredictability of growth. So growth companies can face unexpected challenges such as market competition, regulatory changes, or technology disruption, which can derail growth prospects. And lastly, long-term horizon. These stocks typically require a long-term, investment horizon. Beginners may find it challenging to hold on to stocks during period of volatility, and you expect to hold these stocks for the long run. So that is a risk one should really take into consideration. Number 4, how to mitigate risk as a beginner. How to mitigate risk, as a beginner. So you consider diversification. Don't put all your money, into a few growth stocks. Don't do that. Diversify your portfolio across different sectors and companies to help mitigate risk. Research and analyze. Carry out thorough analysis of the stock you want to invest in. So look into companies' financial health, growth potential, and industry trends. So avoid buying solely on hype. Make sure that you analyze the company's fundamentals critically. So invest with a long-term perspective. You invest with a long-term perspective. Be prepared for, short-term price fluctuations or swings. That should not bother you. Don't allow the noise in the market to bother you. So growth stocks require patience and a focus on long-term gains. You should be patient enough and disciplined enough to wait for the long term to be able to benefit from the long-term gains. And not only that, you start small. Start small. Begin with a small portion of your investment portfolio to limit exposure to risk while you learn more about the markets. Start small. Don't get discouraged. Learn about the markets. And as you acquire skills and experience, you can perform better as an investor in growth stocks. Number 5, when growth stocks make sense for beginners. When growth stocks make sense for beginners. In this case, you consider high risk tolerance. High risk tolerance. If you are comfortable with risk and can handle market fluctuations, then growth stocks, will make a good fit for you. If you can handle risk and then you have a long-term perspective, you can stomach, market fluctuations, then growth stock is for you. And so you must have a long-term investment goals. So in this case, if you are investing for the long term and can afford to wait for growth to materialize, growth stock can offer significant reward. You can wait sufficiently enough to see the growth materialize in the stock you've bought, then that will be a very good advantage. So interest in emerging sector. You must develop interest in emerging sectors. If you are interested in sectors like technology, biotechnology, or renewable energy, growth stocks in these areas could align with your overall investment interest. So if you have these particular tendencies, then of course growth stock is a very good candidate, are very good candidates for you.